everybody as well who is new to the channel. General basis of what we're going to be looking at today is Forex, stocks, commodities, so oil, gold, etc. And then the crypto market as well. Obviously been major movements in the crypto market this week alone. So we'll be kind of analysing that into where things stand right now and ultimately what's going to be coming up over the next week or two. But then also as well, we'll be looking to try and help anybody out on the call who would like some support with their trading into what you're struggling with, or just having a general chat around some important points around trading itself.
For those of you who are new, the channel it trades and gets involved in all aspects of trading, whether it be Forex, whether it be stocks, or whether it be cryptocurrencies. We spend our time looking at charts on all different time frames and all different weird and wonderful charts. So as I said, any questions you might have, we'd love to have a look and analyze those with you, whether it be something that you're trading or something that you would like to trade, you're looking for an entry, or maybe you've opened a position and you're not sure on the exit plan. So let us know, use the chat feature and we'll come to each and every one of them. But for now, we'll pass you over to Joel and we'll share the screen and we'll dive straight into it.
So this is going to be our, got a couple of people joining us for a moment. So what we'll do at the start, just introduce our main discussion point that we'll come to at the end of, after all of the analysis on the charts. We'll come back to this and try and answer some questions that you guys have got. So I'll put it there on the chat, and apologies for my formatting, doesn't look the best. But the discussion point is going to be, what is holding your trading back most of all? So I've got a couple of pointers, but feel free to put anything that you feel is, holding yourself back or your trading back itself. A few common points that we do hear from. Potentially, is it capital, having enough trading capital? Is it having, is it going after too much of profits? Potentially like capitalize that under greed. Fear, that could be under a whole different elements. It could be maybe that you're thinking to yourself, fear of entering positions, fear of exiting positions, all sorts of elements that come under that, but obviously be as specific as you would like, and we're able to try and do our best to use our experience to try and support you in any of those. So we're going to be, another element that I hear a lot of people also ask us about is inconsistency in their trading, win loads, lose loads, and kind of at the end of the day never really get too far with it, one way or the other. Either as well people holding you back, or even you feel like yourself holding your own trading back in whatever way that may well be. Again, feel free to be as specific as possible. And then also obviously the major one is people feel like not necessarily having a strong enough strategy when it comes to their trading, and not necessarily having a game plan when it comes to the markets. They could be really inconsistent even in the strategy. So maybe joining a couple of these points together. And then last of all, probably the other area that I feel a lot of people message us, and we help a lot of our members out specifically as well, is when it comes to like discipline and mindset kind of things as well. But obviously, as I say, we'll come back to these at the end of the call. And I see already we've got Anis. Apologies if I mispronounce anybody's name. I'm usually awful at that, so I don't mean to offend anybody. What should be the equity to easily earn $200 a day? As I say, that's a great question. We will come to all of these at the end of the call once we've done the analysis as well, and try and get as many of these in from everybody. These sessions always work best if you get involved in the chat feature yourself, and we'll go from there. So a few pointers there just to kind of jog your memory maybe, or give you some thinking points to go from there. So what we'll do now, we'll get into the charts themselves.
Yeah, all good.
So We're going to start with the currency markets, so FX markets, and start first of all with US dollar, Japanese yen, USD, JPY. So we're going to view first of all from these higher timeframes, and we'll work down into some of the smaller timeframes to discuss what it is that you're going to be analyzing for this week ahead, really. Now, I usually use these sessions as well quite usefully to clean up some of the levels that we are watching. Okay, so these are the levels that we already have on our charts of what we're currently watching in USD JPY. As you can currently see, we're on the daily chart. Huge sell-off in the dollar against the yen on Friday. And up until then, it's been quite a strong uptrend. But interestingly, that has absolutely came into our support zone that we've previously mapped out from a long period ago, going back into December 2018. This was a swing high at that point. Lots and lots of orders were waiting at this stage, order blocks, etc. And what we were watching for initially when the drive up to this price was whether or not this is going to meet as a level of resistance. But if it was to break through, like it has done over the last couple of months, it would then also form as a key level of support for the market as well. That happened back in November, and we can see the strong support. If I just highlight those two candles that I'm viewing, just there, look, that is a huge level of an indicator for this as being a key level of support. The market has kind of drifted up. Well, it's actually broken through that with a lot of momentum, all in one day, broken through that resistance level. Formed a base on top of that, and now it's just kind of drifted back into that level of support, and this is the explosion. So this tells you that this is a buying level for the market. Okay, it does wait, you know, it comes still to be seen whether or not the amount of momentum in this selling is going to start to threaten going back below there, but at least I would expect to see some sort of a bounce, knowing that there's a lot of previous buying in this zone already. So that would be my initial bias. If I try and check that with the weekly as well, going back into this zone, you can see this is why we've highlighted this as the order block before. You can see clear order block formed on the weekly, violent breakdown, lots of pending orders waiting in this zone. What I'm going to do is just to try and kind of get my bearings on the chart, I'm going to use that line there, just see how that is corresponding at the moment to these wicks that have been forming on the weekly. Well, I mean, yeah, we are getting difficulty to break to new highs. Of course, what we want to now be seeing to confirm this next leg up higher in the chart to start, you know, trying to take out some of these higher levels up here. Got a potential target already marked at 117.8. We want to see some closure above this red line. So we haven't seen that yet, but putting it all into perspective, what we're seeing at the moment, this is quite a classic bullish flag pattern. For anybody that's fairly new to trading, we'll kind of give you a small indication of what does a bullish flag look like. It's essentially when you see something like that in the trading pattern, a long bullish move up, like we've just seen there, and then a bit of a sideways consolidation. Usually the textbook for this type of breakout would be, you'd use that as the first flagpole. If this level gets broken and we get like a weekly closure above into these wicks here, or even a weekly closure above this level here, or you know, the top of the dailies that we've marked out there, you can actually use this as a general guide to where the market may end up. Okay, just as I say, a general guide, by no means is that precise, but it's just as a little bit of theory when it comes to trading as a general guide. And you can already see that that puts us in the general direction of our previous zone that we've got marked out there, and that is a previous swing high. Okay, so it gives you an indication of potential levels that you can actually start to target in your trading if these levels do get broken, and if it does start to fulfill the bias that you've got in your mind. So two levels, with that being the case, two ideas when it comes to trading patterns. I'd be looking on these smaller time frames, on the 4 hour, on the 1 hour. I'd be wanting to start seeing some structure to start breaking and to start printing some new highs. At the moment, we've got really, when I say structure, this is what I mean: higher highs, higher lows. We'll call that kind of a bit of sideways trading, but this was then a major breakdown. So now what we want to start seeing is, on these lower time frames, even 30-minute time frame, anywhere between 30 minutes to 4 hours, I'd want to start seeing now a level where we're going to start doing something like that. Maybe not even making a new high, but, start to not make new lows. That would be the important element. And then the new high on a small time frame like this might then give you the opportunity to take a long position that would give you a nice risk to reward. You can put your stop loss either below this level of what it had been previously formed. That is if the market does continue to do what it is doing, or you can be a bit safer and put it below the whole level of support that we've identified. And then you can use those higher time frame targets to either make the major swing trade. If you're happy to hold your trades for much longer, if you're willing to hold this for at least a number of weeks, then you can at least try and target those higher levels up there. If not, then you can look at these smaller levels in there, and you'll still get nice risk to reward. You're getting a 2.75 risk to reward there, but even there, you're at least getting 1-to-1. And especially if you take a more aggressive entry below those levels of support, you can easily make that into a 2-to-1 risk to reward just by targeting the recent highs. So that's just talking about the bias that we've already got, using that and a couple of techniques in trading to try and target some highs there. So quite basic stuff, nothing too advanced in that, and just kind of give an idea of where our bias is at the moment and our thoughts behind that. So that's what I'd be looking initially for the USD JPY. And that's just simply by not trying to get caught into the whole psychology of what this candles are doing. By all means, this could continue, and this could then, invalidate those trades. And I would also stress that if it does start breaking below this level here and doesn't give you any sort of an indication that it's breaking back above, then I'd be quite worried about taking those long positions. You always have to kind of be fluid with the market, as it were. So trade what you see and work on your support levels for now, but also, be willing to be flexible if they do change. But you also have to have a clear trading plan in your mind to begin with. So that's what we'll do for USD JPY. If that changes, then of course by next week's chart breakdown, we will reanalyze that and start looking at other targets. So Euro USD. Where are we in here for Euro USD? Well, Euro USD has been a trade. We had a fantastic trade on this. Alex would probably be better to tell you exactly when that trade was, or where we was it up here that we took an early position in?
It was our first entry, yeah.
It was somewhere up here, and we sold it off all the way into this red zone, if my memory serves me correct. Massive trade that we pocketed a huge number of pips on, and we were then initially looking at 1.14 as being the level that we wanted to start looking at buys from. But that hasn't been able to happen by any stretch of the imagination. Once it broke into that level, see, we were targeting this order block that was way back here. That got broken through in one day. And when you start to see that momentum, then you have to be wary that those levels are not holding by any stretch. That momentum has continued, and we've now seen a little bit of a bounce back in the euro. So you can see where that's coming off. A previous level that we'd already got marked up on there as 1.122. It's been quite a level of support. So again, we're looking at that. Is that going to be a new level that's going to be significant? If it is, we have to be conscious that we're still trading through lots of previous levels of, well, which were levels of support, could easily turn as a level of resistance. That 114 now could easily turn into a level of resistance. So this bearish trend is massively in control. Sellers hugely in control of this market. Okay, we've bounced off a level of support, but we need a lot more than that in order to start looking at a complete reversal of that trend. So I wouldn't, for my advice into the next week, for anybody that's thinking to buy the Euro USD market, just be wary. It may even just be a market that we don't trade this week just because of that indecision. There's arguments probably both on the buy side and on the sell side. And when you see that, probably best just to move on to another market that's going to give you a bit more of a clearer signal of its direction. If I was looking at sells in this market, again, I'm not looking to sell from here because we've had a huge bounce. I'd probably be targeting this 1.14 level and seeing whether or not that gives, on the smaller timeframes, again, an indication that we're looking to sell off. Let's see whether or not. Just interesting, I very rarely use the Fibonacci's, but just as an indication, say that 1.14 level is coming up as a 38.2 level for that sell-off. So it's another confluence, at least, that you can add towards that as a potential level that it could react from. But it's just about being conscious of some of the dangers on this chart. This bearish trend as well, this is the other thing that I'm considering. This is a very extended bearish trend. You've got to think you've had one move, two moves, three moves. So if you're looking for any sort of long trade in this, the potential that you're asking for a fourth move down, maybe from that level, you're asking a lot from the market, but it's not unheard of. So this is why I go back to the point of maybe there's just better trades out there, and wait for Euro USD to give you a bit of a clearer signal. If you're looking on the smaller time frames, I'm talking, 5, 10, 15 minutes, looking to really scalp these trades, then it all goes into structure at the end of the day. On when you're looking into small time frames, you've got a bullish trend already established, and you could look to try and take small risk to reward opportunities in line with that until that changes, really. But not really at this stage something that we'll look for the next week.
No, and I think for those who were interested, I just managed to look back. Our first entry into the short was back in September the 12th. We've taken a number of positions since then, but that's been as you can see, they're highlighted there where literally we've gone into the zone, and that's something that we'll have pre-put on the chart. And this is something that the members that we speak to on a weekly basis will be aware of. But we're constantly analysing charts ahead of time, like what we'd like to see. And it just means that when you actually do come to enter and exit your trades, you've already got these timeframes and these zones put on your chart, and it just makes your entrances and exits to the market that much easier to do. It removes all emotion, and your educated entry into the market is there for all to see. And then since then, it's about trade management and managing the trade through. Whether it be adding positions, taking a bit of risk off the table until you hit your target profit levels.
Very well put. I think that really summarizes everything that we wanted to look at for the euro. So we'll move on to pound USD. And I feel this could well be something similar. The only difference being for the pound USD is we've got this nice channel. So you've got two elements now that maybe are adding confluences. If you did want to take a buy position against the trend, remember we are still against the trend on the daily here, because you can see the trend is marching its way down. We'd much rather be taking sells from the top of a channel than we would buys from the bottom. But that doesn't mean that it's by all means a bad trade. So, this is the elements that we need to weigh up. what we're looking at here is a key level on the market. We can really extrapolate this further back from where we've actually taken that level of support from these wicks here on the daily. As if I just saying that in, these is the previous swing support that we've got. And it's actually coming back into that level at the same time as it's touching the bottom of its channel already. So when we look at this on the daily perspective, you compare that to what we were seeing on the euro. It's got some confluence in that respect, that you've got two elements now, two markets moving against the dollar in terms of both finding levels of support. So you've got two elements to your favor there. You've got a nice, even though you've got long wicks on both sides of this, the body is still an engulfing body over the previous candle. So that's, again, another positive confluence in the market. Probably what I'd be looking for this week is to try and limit my risk on this by taking a nice risk to reward, massive risk to reward opportunity by waiting for the market to get back into this zone. Not all the way through. I'm not necessarily looking at another tap of the bottom of the trend, but maybe just to like retrace the wick here, 50%, maybe in line with what that previous one was there on the Thursday. So if I get something coming into this level, something around there, then I'm going to be a lot more confident taking a very high risk to reward opportunity. By all means, these never, always play out, but it's all about over the long term, taking these opportunities, and they will play out more times than not. You can really move your stop loss right tight below that wick. Maybe give yourself a little bit of a cushion. And as you can see there, we've got a 40 pip stop loss on a daily chart, which is absolutely nothing. And you can really use this risk to reward opportunity. You can either target the top of the channel if the opportunity comes, but I'd be taking profits off the table probably at least here and here before moving up into that level. So even just that gives you a nearly 5-to-1 risk to reward opportunity, even if you would take your full profits if it hit this level. And I think that how I like to view these opportunities, this amount of confluence, I've listed at the start of this analysis, at least 3 levels there that are nice, 3 reasons that are confluences. And if you take those trades 4 times in a row, you'll win at least one of them. And that would be to break even. If you win 2 of them, you've made 4 times your risk. So you're making lots and lots of risk to reward entries. It's really the major thing when it comes to trading, making sure that your reward outlies the risk of taking that position. It's something that I hear a lot of people talk about in trading, is always make your trades 2-to-1 risk to reward. Well, not necessarily going to be every single trade needs to be 2-to-1 risk to reward. If that setup pays off only 1 in 5 times, then that setup needs to give you an opportunity of at least 5-to-1 risk to reward. You see, so it's a balance of understanding your risk in terms of the setup. Is that setup offering you a high probability? And if it's a high probability that it's going to play out profitably, then you need less reward in order to take that profit. It's all about playing those percentages. So anything that's standing out to you on this chart yourself, Alex, that I haven't already covered?
No, I think you've touched on it nicely, and as you said, it's all about getting the confluences to add up and to put your trade in the most likelihood of it coming through. And as you said, you're trading within the channels there, and unless it was to break out of that channel, then your stop loss is tight. You can take a small loss and you can move on. But as you said, it's a 5-to-1 risk to reward ratio there, and it looks lovely to me. But what we'll do,
I just wanted to point this out as well, because things like this are massive flags that traders don't necessarily always see. Look on the weekly chart, look at where has this candle finished the week, and that's always an important thing. Where has markets finished? Where have they rested after all of the institutional traders have placed all of the sells, all of the banks have placed all of the buys, whatever it is that they have needed to place throughout the week, and they've now come to an end of that trading week. Where has the price finished? Usually it's exactly where they want it to finish. Now look at this. We've got a wick into this zone on the weekly, wick into this as well on the weekly, wick again into the weekly, but look at where this candle finished. It's finished, it's dead on exactly where this candle's finished. It's just small hints like that give you an indication of that the market is maybe telling you a sign. And look at the amount of levels of support on the weekly that we're into. That this level gives me lots of confidence that we could actually make a very nice opportunity to buy this market. But we'll wait and see how the opportunity plays out throughout the week. And obviously as well, premium members who are with us will get the entries as soon as we actually take the trade ourselves. So we'll just kind of wait and see on that one. Now, pound JPY is probably going to be a similar thing. Maybe doesn't need too much analysis into this, and probably just simply looking at that where it is on the weekly. I'm not necessarily, see what's happening in the market here is you can see it both in USD JPY, huge sell-off, pound JPY, huge sell-off. This is all based around the recent variant in COVID that I'm sure everybody has heard of. And this is a risk-off move by buying the yen. You can see that now in two markets. It doesn't necessarily matter what it's actually targeted against. We can see this by actually looking at the yen market. Yeah, the yen market is flown massively higher. Look at this just simply on a day basis. It's moved from there over nearly 2% in value the yen has gained, which is huge when it comes into currency terms. Like that move, even though because it's got a massive gap, you don't necessarily notice it, but that would be a huge candle, probably bigger than any of the other candles on this chart here. Just gives you an indication. Huge risk-off moves, lots and lots of buying of the yen as that's a risk-off currency. But we'll move on from that. It's probably a trade that we don't need to chase, so we'll move away from that and probably not look to trade the pound JPY market. Oil though, again, heavily influenced by the variant, and I probably expect that this is going to open lower than where it has finished the week. So I probably expect that the market will actually gap down a little bit, just because there's been even more negative news over the weekend. The UK, for example, is now implementing all sorts of restrictions when it comes to COVID and, you know, wearing masks, etc., just going down that same path that we've already known for the last 2 years or whatever the case is. So without getting political into that, because there's absolutely no need to do that, we're here to make money, not, you know, kind of debate that element of things. We're looking to try and trade what we can from this. Now, if this momentum is continuing, which I do expect it will do, because I think that this situation is still just going to continue to play itself out. And what we're seeing in the oil market is a massively overbought market for oil. No need to get into, it's horrible when you get wicks down like that, that just kind of ruin the chart. But we've seen a massively overbought market already, you know, trading at massively high levels, and it just needed any sort of negative news. Of course, this is very, very negative news for an oil market. Travel bans to countries and all the rest of it just really dampen down that demand for oil, and that's what we're looking at here as a fundamental change, not a technical sell-off. So this isn't traders trading, this is just fundamental dislocations and people getting out of positions. This is what this sell-off is. So I think it's still got a few more legs to go in this, but there will be an opportunity to start buying this market as fear is setting into the market. This is something that is fundamental to any successful trader. Always look for two things in the market. Should look for fear and greed, okay? Whenever you see those, they're a massive indication that you should be looking to take the opposite trade. So at the moment, we're going to start to potentially see more of a sell-off in oil, and that's going to be a signal for us to see that fear is setting into the market. People are making irrational decisions by selling off a market that is then becoming heavily oversold. So that is what we are considering now. Getting into those realms, whether or not we're right here right now is the level to start buying. Unsure of that, but we're definitely in that region and probably going to have to come in before it gets into this level of support. So difficult to say where that is exactly off this chart because it is a fundamental move and things are kind of evolving in that storyline almost day by day. So just have to kind of analyze that. Very small wick. So I'm just thinking this sell-off is probably going to still continue. I wouldn't jump into sells with the market if I haven't already got sells on. If I was selling up here, then yeah, I'm probably holding those positions. I'm not making new positions here though, because it's far too late in the move. Can we see anything from a smaller time frame? Probably not, but what I'd be looking for is any sort of like, if you get any intraday relief, then you may get, relief rally, that is, sorry, for anybody that is new, using technical jargon, which I try not to do. If say you get small relief rallies on like the 30-minute, 1 hour charts where you start to maybe get a little bit extended to the upside, they're great opportunities intraday to take small risk to reward opportunities for the sell if that still continues. So watch for those. It's similar like this, look, just little small, these are called dead cat bounces. Market is selling off massively, very small bounce, and then selling off massively again. So it doesn't take massive analysis into this. It's just about, moving with the market as and when it comes into it. And then on the higher time frames here on the daily. Can we see any level around this level here? I'm going to mark that out. We're going to use that one. Works out quite nicely. So anywhere around there, I'd be very, very interested in buying, but I doubt it'll even get to that level. It'll be somewhere between here and here that there's going to be a great opportunity to buy in the market. So we'll wait and watch, and of course update our premium members with any entries that as and when we take them. So we'll move on to gold. Quite surprised by gold as well. Quite surprised for gold. Because given the outlook that we're seeing, large risk off moves, markets maybe are a little bit worried about this new variant, etc. You'd expect gold to be actually heavily brought up in this environment. However, it's simply not. It's any sort of relief that it got on Friday, got massively sold off. So confusing from a fundamental perspective, because you'd expect this to be a risk-off move and gold would do well in that, but it's simply not the case. You need to listen to that in the market. If a market's giving you an indication, especially if you see a market that should be moving higher on a news event and it doesn't, even if it just doesn't necessarily move as high as you expect it would, then that is a massive signal. So that gives you an indication that people are using that news event to sell gold at this stage. For whatever reason that may well be, that is what's happening and that's what we need to listen to. So with that being the case, I'd probably not expect gold to get too much higher than this wick at any stage. So if you get any sort of rally into this purple region around 1800, it's going to probably be a sell-off opportunity. So that's I'm just thinking, especially on a daily perspective, we've had one move, maybe need another move into this market to at least touch the bottom of this range. Because what we've seen previously, markets tapping this range again and again, right? It's then kind of moved up higher, but every single time that, if you see a range in a market like this, right, and you see this sort of move where we've already seen it, etc., then you see a market do that where it peeps its head out of that range and then returns back into the range. The odds are that that is going to continue back into the bottom of that range. So we think that gold should well be coming back into 1760. So watch out for that. It would catch a lot of traders out, because I think a lot of traders are using this level here as a support level, which it could well be. But it's just for us, looking at the signs of what the market is telling us, I'm very interested in seeing whether or not gold would get back into this 1760 level, and taking sells from this here, using that as my risk, stop losses above this level, and using I'll take profit at 1760. Looks a nice trade based on that chart. Not taking the fundamentals into account necessarily. The reasons why I'm not necessarily taking those fundamentals into account is just because the market is already telling us that. The market's not taking the fundamentals into account, so you not necessarily need to yourself. If this candle would close at the top of its range, then I would be thinking very differently. So it gives you an indication of what our thoughts are for gold there, as well. Any thoughts yourself on that?
Well, I think yeah, I think as you've kind of touched on it, I think that what we're seeing at the moment with from a fundamental basis is that there's a high chance of volatility, as we've already seen in US oil, as we're yet to really see in gold. But it's one of those ones where, and what we say sometimes is an equally good opportunity to take in a high risk to reward trade is to also conduct your analysis, stay impartial, and wait for that right opportunity. So, as I said, listen to what over everything. Look at what the chart's telling you. If you're unsure for whatever reason, wait. An opportunity will always come around the corner. Speaking about opportunities, as you can see lined up next on the watch list, we're going to dive into a bit of cryptocurrency. Also, for those who have just joined the call, within the chat feature, there is the kind of overall discussion point that we're talking about this evening. In regards to the title is what's holding your trading back? Is it capital? Is it greed? Could it be fear? Entries, exits, inconsistency? Are you holding yourself back? Is it your strategy? Is it your mindset? So feel free to get your answers into the chat, and we will come to that at the end of the call.
Yeah, and also get your questions into there ready for when we come to the end of the analysis, and we're able to get straight into it. So we'll first of all, before we get to that though, look at the crypto market itself. So first of all, start off with Bitcoin, because quite clearly that is the king when it comes to cryptocurrency market and where we are at the moment. So we've got these previous levels that we've already got marked out. Okay. And for disclosure, we do have a current open position on Bitcoin. Our entry was here at 41,550. So overall, when at the heights hit 66%, but that's now drifted to around about 30%. Still nice profit, but we're just kind of still holding that position. I think it's important to say you're at the moment here lots and lots of negativity around the cryptocurrency space from all sorts of different commentators, whether it be mainstream people, whether or not it be even so-called experts in the industry, whatever it may well be. Okay, lots and lots of negativity around the cryptocurrency market right now. So I like it when I hear those types of things. When I look at Twitter and I hear everybody selling their coins, or in a panic mode, everyone's forecasting Bitcoin's going to 4,000 or it's going to wherever. I get quite happy about that, because I think that for any situation where you've got long positions in the market, where you've got, for any beginners, a buy position or a long position in the market, that's really, really positive, because I like to see that fear entering the market. Because when going back to earlier in the call where we talked about fear and greed, that is probably strongest, those two emotions, when it comes to cryptocurrencies. Because by no disrespect to anybody in that position, when it comes to cryptocurrencies, we have a lot of new traders in who maybe haven't got experience trading stocks or haven't got experience trading currencies. Lots and lots of people's first financial investments have been cryptocurrencies over the last year, 18 months, whatever the case may be. And as we all know, new traders often make a lot of mistakes. And that's just a lot of the time down to mindset, discipline, all the rest of it. So I look to take into account those decisions and use those in our positioning. And we are entering that phase at the moment where we're seeing a lot of that negativity. What I like to look at here, first of all, the Bitcoin chart is still pretty healthy. You know, even though we've drifted off the high somewhat, we've by no means, look at this, the bottom of the chart isn't even in the picture, right? We're still massively, massively higher than where we have been over. When you look at this chart, having to zoom it out so far because of where it is, and this is only the Coinbase exchange. This extends, obviously, as everybody knows, much below $200. But when you look at a chart like that, ignoring all of these drawings that we've got on there, this is not a chart that you should look to try and pick a top in. This is certainly this is a market that you should look to try and ride higher. So people get very, very conscious about trying to trade this chart, you know, 15 minutes, 30 minutes, etc. When it comes to cryptocurrencies, all of the experienced traders, all of the biggest, the wealthiest traders, the institutions, the banks, they're looking at this picture, okay? They're looking at this picture and looking at levels where they can buy, where they can accumulate their positions and ride that train higher. They're not interested in trying to sell off small positions and take, you know, small profits on both sides of the market, because the volatility in this market is huge, okay? Anybody that's been with us knows that very well, but this is more directed to anybody that's new who's joined us on this call. But what we'll do is actually, this is one of the key elements when it comes to cryptocurrencies. Let's have a look at this chart. This is called, on TradingView, you can see this at any stage, called total, okay? And it's simply the cryptocurrency market cap. It's all of the money that's invested into cryptocurrency right now, okay? And it takes into account not just Bitcoin, but every single cryptocurrency. And it gives you an idea of where, if money is moving into the market or moving out of the market. So what we're looking at right now is that we're at a key level of support. If I draw that line across, look, you've got previous resistance, broke through that resistance in October. And then we used that as a level of support. And it's then, of course, has run to our recent all-time highs. And now we're now coming back into that zone, and look exactly how these markets are reacting. When it's reacted to this level, we're getting levels of support. Even from today's candle, look, we're bouncing higher, closing to the mid-range of that candle. Previously, huge momentum selling off into there, and it just looks to me a lot like this. All of this region here, look, that looks like accumulation of buying in the market. Okay, not just simply in Bitcoin, but of course, that's across the entire market, heavily dominated by Bitcoin, because that's where most of the institutional money will be moving. And that's the reason why you can see that clearly the buying probably is in those coins that are doing well today. Some of these we actually pointed out in the channel for everybody on Friday, on Black Friday. We said Bitcoin, Ethereum, I think we mentioned, maybe we didn't, I'm not sure necessarily on that. Uni, sushi, 13% up today. That was one that we mentioned as well. And a few others in there that maybe are just a few percent down, or one or the other. But quite clearly already some of those are doing extremely well. And it gives you an indication when we look at this chart and we start to see levels of support, then I start looking at the entire market, or a cross section of the entire market, and I start to see which coins are doing well on that day, and that gives me an indication to know which of these coins are getting brought in that rally, or in that level of support in this accumulation zone. So that's probably the best way I can sum up our positioning when it comes to Cryptocurrency, if you're in a position at the moment to add to positions, then do so. And that's certainly what we'll be doing over the next week. And of course, share that with our premium members about our coins in our portfolio, which they'll know about already. That we'll be adding to positions and taking advantage of some of these lower prices that are happening at the moment. Anything you can add yourself on that, Alex, while I just go
Yeah,
grab a quick drink?
all I wanted to say was, for those who haven't spoken with us directly before, I just want to point out that all our cryptocurrency investments are exactly that. They are bought and held based on their use case, and the position is without leverage. There's no leverage on that, so it's all about investing in the long term. But what I'd just like to talk about whilst we're going through this is we've had a couple of questions come through, ones that I'm sure Joel will be happy to answer to you. So thank you very much for joining us. To all who are on the call, thank you very much for your kind words, Mayor. And this is one for yourself, Joel. Why do we think that gold hasn't moved up given the massive sell-off on Friday? And also, what would our thoughts be on a long position in the Nasdaq?
Right, so thanks for that. So yeah, let's get into the main discussion point that we said at the start of the call. What is it that's holding people back at the moment in their trading? So a few questions that have come in. We'll start from the top and work the way down. I guess that's probably best.
Yeah.
And the question here, Anis Nadim, what should the equity be to easily earn $200 a day? I hear these questions quite often, and it's a very difficult question to answer, simply because if you look at trading returns in terms of what do they look like, they're never going to simply look at 200 Monday, 200 Tuesday, 200 Wednesday, 200 Thursday, 200 Friday, etc., etc. Okay, they may well look at 1,000 Monday, 500 loss Tuesday, 100 gain Wednesday, Thursday, Friday. Maybe you've had a good day and earned 300-400. Whatever it may well be, you may earn on average $200 a day, but you need to have the equity in your account to withstand any sort of drawdown. So look, you could easily say, a very easy answer to this would be like, okay, look, you're going to look at what do you want to gain, maybe for any sustainable sort of trader who is using good risk to reward. My personal feeling, I don't know your thoughts on this, Alex, I'd say you'd at least need upwards of 5,000 to earn that level of money per day, if not significantly higher.
I think ultimately that in the question that Anis, or the word that Anis has gone for there, is to easily earn $200 a day.
Well, yeah, that's the thing.
If I'm looking to easily earn $200 a day through trading, and how I'm interpreting ease, and it might be different to yourself, but for me, it would be the lowest risk possible.
Yeah, no,
so
you're
therefore,
right.
For me, I would be targeting 1% daily return. And on that basis, the account size that you would need for that would be a $20,000 account.
I think that's right.
That would be my interpretation of it. If yours is ease referring to speed, then you might safely need more than that, because you're going to want to leverage some positions. Exactly. But for ourselves, based on, and you got to think, taking compound interest into account, 1% a day is incredible.
Well, it'll absolutely fly over time. Give yourself 6 months at 1% a day, and you'll be doing extremely well.
So, in answer to your question, how I would interpret that, to easily make $200 a day, you would need a $20,000 account, and you would be targeting 1% return each day. And over the course of a couple of months, to the course of a year, 2 years, believe me, that 1%, because your trading plan wouldn't change, you'd be implementing the same method repeatedly, you'd be looking for the same setups, you'd very quickly, in trying to earn $200 a day, be making $500-600 a day. Consistency is the key. So for me, easily lowest risk to reward, $20,000 account would be my answer to you on that one.
I think that's a really, really well put answer. We'll move on to the next one, and it's coming from 1,000 pips on GJ as a username, and that's
What trade?
yeah. My problem is capital, and okay, so in terms of that, it's not an easy solution when it comes to increasing capital. Many traders, when they start, I think you could probably look at pretty much any trader that you like to probably look up to or use any sort of mentor. We'll probably at some point, at least recently, have started trading to some degree with a job already and trading on the side. That's more than possible to do. So if capital is an issue, don't look at it as in you need to, work full time at trading. Of course, it's beneficial. You'll obviously make substantially more when you do that, but don't simply. You can use a full-time job as that capital to help you trade. And going back also to Alex's point just made is the fact that don't overestimate what you necessarily need to have in order to start making substantial returns. And the majority of people who are into or just coming into trading have the best advantage of all. They have time on their side. So as I said, even if you're just making 1%, 2% a day, give yourself 6 months to a year making 1 to 2% a day, and you'll make a significant return. Okay.
I would like to add on to that one as well, kind of looking at it from a different side, and because I made the point of implementing the same plan repeatedly. Now, if you're trading with a £100 account and you're targeting £1 or $1, per day, and then all of a sudden you have this cash injection and you have a $10,000 account, your emotions when you're sitting in those trades are going to be different. If you've had a $100 account for a couple of months and you've got used to it, and then you've leveled up and you've got your $10,000 account, all of a sudden you're going to be sitting in drawdown of $100, $150. Waiting for your position to come through, and your emotions are going to be all over the front, all over the shop. So the best thing to do, and this is what I would say to anybody, is start with a level you can afford and then just keep building slowly. Look at it in percentages. Don't worry about thousands of pounds missed, that your opportunities missed up on, or there is a long game. This is a long game, and in order to achieve what you want to achieve, it's all about consistency. Just because you have an account that is 20,000, 100,000, believe me, we've spoke to members with all sorts of levels of capital. Just because you can trade with $1,000 doesn't mean you can trade with 100,000. You might think that's the case, but it's not the case at all.
And I think that's probably sums up the answer perfectly when it comes to that as well. So moving on for Maya, a really interesting session. Thank you. So thanks as well for coming along and joining us. Why do you think that gold hasn't moved up given the massive sell-off on Friday? Also, what are your thoughts on a Nasdaq buy at this stage? So probably when it comes to the gold question, I'm thinking just simply because given that fundamental news, you'd have probably seen lots and lots of inexperienced inexperienced participants in the market, new traders, retail traders, whatever it may well be, are buying the market on that news. That's probably what we saw in that little spike up in the market. But institutional buyers, so your banks, your JP Morgans, Goldman Sachs, all of it that you can think of, they're using that liquidity to sell into. Without going into the huge reasons of why that is the case, that's what is happening. That's what we've seen from the market. So that would be the reason why. Also, what are your thoughts on a NASDAQ buy at this stage? I haven't looked at the chart in this session, and I can't picture it on my mind of where we are at the moment, but it depends on your strategy. If your strategy is to, buying the NASDAQ over a period of 1 year, 2 years, 3 years, then probably now, in any sort of sell-off for the stock market is a good place to start adding positions if you're in that position to invest. But if you're looking to instantly trade it, I can't necessarily say without looking and doing a full analysis on that chart. But by all means, it may well be something that we do look at another stage. I had a couple of questions come in as well. I'm going to buy gold up to 1810 before shorting it. What would you say about taking proprietary funding? Okay, so when it comes to your first mention around gold, brilliant. Of course, welcome to go along with that, and of course, wish you the best of luck in your trade. Let us know how it goes as well. What would you say about taking proprietary funding? It's a question actually we do get quite often. Our thoughts on that is it all depends on your own personal position, but it's not something that we have done ourselves or probably would look to do on the basis of it's too restrictive. Okay, for two reasons. Lots and lots of question marks around that business model for one. Okay, not going to get into that too much at the moment, but I have some question marks around companies that do provide that. Second of all, there are lots and lots of restrictions. For instance, you'll be told that you can't hold positions overnight. So then that's limiting your opportunities of what you can enter. When you're analyzing markets, you're probably going to have to cut out a lot of the trades that you would like to take because they're too restrictive in terms of reasons of how you have to trade, how much risk to reward that you can put on, etc., etc. And also as well, it's heavily targeted. Okay, so we heavily believe that you should take what is on offer from the market when it comes to profit. Sometimes when you're in a trade that's got great risk to reward opportunities, proprietary funding accounts, they require you to make 10% within 10 days or something like that. So you're already taking far too much risk to the reward that you're looking at. You're not focused on simply taking good quality trades. You're focused on trying to make this 10% or whatever the target is on that account. So overall, if you were to look at the numbers of people who win or lose from various other reasons, you're adding barriers to your success. Keep it simple, keep it really straightforward, focus on the process of trading, and also, as Alex suggested, when it comes to the question around capital, if you're currently trading a $200 account and then you go to trading a $200,000 account, even though you may not view it as your money because it's proprietary money or whatever the case may well be, your psychology is completely different. Seeing swings of thousands opposed to dollars, you'll be making the wrong decisions based on emotion and not logic. So just simply not something that we advise or have done. So if it maybe does work for some people, but just not for us. Anything that you'd add on those couple of questions?
No, I think you put it really well. I mean, one thing I guess you could kind of suggest or argue is that how would you feel? Well, you would trade with your own money versus how would you feel trading with someone else's money? There's two sides to that one. You could care more or you could care less, but the reality is long term, for the benefit of your own trading, and this is what we all do it for. You do it for yourself, for your family, for your future. Long term, it's always best that you trade within your means, within your funds, and arguably with money that you are able to potentially lose. That risk is always there. You don't want to go and get yourself in any issues that might stick with you for months or years or longer. So yeah, well, one thing we always talk about is to keep risk as low as possible. And we do that by sticking to a trading plan, by building the confluences, and by doing our own analysis. And equally on that basis, we're trading within our own funds and without leverage. All those reasons and all the things that we do are to build an account, adding on percentages on a daily basis. And we have better days than others, but we keep our losses low. We all have losers. It's just important your losses are smaller than your gains, and over a long period of time you will build that capital that you were talking about. So yeah, that would all be I'd like to say on that. I'd also like to say thank you for everyone who's joined the call this evening. Yeah, it's been great to hear from you. Thank you very much, Maya. Much appreciated.
Yeah, thanks everybody as well. So as we mentioned at the start of the call as well, we do this every single week alongside all of the other elements that we do give to our premium members. For anybody that is interested and does want some access into that every single week and all of our support that goes on throughout the week, our entries and all the rest of it, all that you simply need to do in order to join that is to come to our website, tradinggroup101.com, and to come join Trading Club 101, which is here, and you will be able to see everything that is included in your membership, and you get access to our premium Telegram channel, one-to-one training sessions as well with us. So every single month you're able to get a one-to-one session with us for about half an hour, where we just simply talk about your own trading, your own skills, where your experience is at the moment, and start to try and put a little bit of a plan in place for you. Do that every single month with all of our members. If it is something that you would like to take advantage of, you can book into those every single month with us. And as we just mentioned as well, our live chart breakdowns are available every week. We do these on Sunday. So these are the prices to get yourself included. And very exciting, we do also offer a 30-day free trial for anybody that does join. So you can join today, pay nothing until 30 days from now, and just see if it is the right thing for you. So you've got two options, either on the monthly, on the annual, to save yourself a little bit over the year. Both of those have the 30-day free trial option. So if you have any questions about those, then feel free to message us directly into our DM on Telegram. All of those details are at the top of the channel. So other than that, guys, from myself, thank you very much for joining, and it's been a pleasure.
Thank you very much, guys. Great to speak to you all. Take care.
See you guys.